On September 29, 2025, Electronic Arts was bought in a historic $55 billion deal. Priced at $210 per share, a 25% premium. Who is behind it? And what does it mean for the games you love? From football to shooters to life sims, EA shaped modern gaming. Today we break down the why, the players, and the impact for gamers. Stay to the end and tell us if this is good or bad for gaming. Let's get into it. First, the context. Electronic Arts is one of the biggest game publishers in the world. Sports, shooters, racing, and live services power its revenues. But in 2025, gaming hit a tough patch. Softer sales and rising competition. Investors pushed for focus and faster returns. Enter a consortium led by Saudi Arabia's Public Investment Fund, with Silver Lake and Affinity partners. A $55 billion leveraged buyout, reportedly the largest ever, takes EA private. Going private removes quarterly pressure and can unlock longer-term bets. But the debt load adds discipline and risk to spending. Shareholders received $210 a share, a 25% premium into the announcement. Leadership remains in place, signaling continuity with a mandate to invest. Studios keep shipping. Day one, players see little change. Behind the scenes, budgets and greenlights get tighter reviews. Meanwhile, growth bets like esports and live ops remain central. So who are the players behind the deal? First, the Public Investment Fund, Saudi Arabia's sovereign wealth fund, part of a national push to grow gaming and esports. They have invested across the industry, building influence and capability. Before this, they reportedly held just under 10% of EA. Silver Lake is a tech-focused private equity firm with big media and gaming bets. They specialize in scaling platforms and monetization across digital ecosystems. Affinity Partners, led by Jared Kushner, adds capital and controversy. Their involvement fuels debate over the intersection of finance, policy, and games. EA leadership, including CEO Andrew Wilson, remains in place. The message: more innovation, clearer priorities, and stronger execution. In short, PIF leads, Silver Lake co-sponsors, Affinity participates, EA goes private. Regulatory and shareholder approvals culminate in a closed deal. So why make this move now? Let's break down the motives and the risks. EA owns some of gaming's most powerful franchises and live service cash flows. Recurring revenue from sports and live ops is the crown jewel. For Saudi Arabia, gaming is a pillar to diversify beyond oil and build a global media presence. Going private can free strategy, but high leverage adds pressure to hit targets. Smaller bets, like indie partnerships through labels akin to EA Originals, could face cuts. Saudi involvement raises ethical questions that some players and developers care about. Expect scrutiny around governance, content direction, and regional sensitivities. On the upside, deeper pockets could supercharge flagship productions. Investment in infrastructure and data could lift retention and margins. So what changes for you and for gaming at large? Short term, your library and services keep running. Blockbusters like the next Battlefield-style title could get bigger budgets. Franchises like Life Sims may expand with live events and creator tools. But smaller, experimental projects risk losing support under debt pressure. Expect a bigger esports push, aligned with Saudi-backed event growth. International expansion, especially MENA, becomes more strategic. This deal signals more consolidation and private capital shaping gaming. Expect ripple effects on pricing, subscriptions, and studio hiring. What do you think? Opportunity, risk, or both? Drop your take in the comments. EEA's $55 billion buyout is a turning point. More freedom, more pressure. It could fuel bigger games, but squeeze smaller experiments. Subscribe for deep dive gaming business news, like if you learned something, and tell us which EA game you want next. See you in the next breakdown.